Welcome to another Building Wealth video. Today we're going to talk about protecting the wealth that you've worked so hard to build. Most of that has to do with insurance and different insurances. We're also at the end going to talk about resetting your financial goals that we talked about in the first video, and what wealth means to you. Let's start with talking about protecting your wealth. After working hard to create personal wealth, you need to protect it. People acquire insurance to protect themselves from major financial loss. Insurance is simply a promise of reimbursement for a loss in return for a premium paid. When shopping for insurance products, consumers should match their needs with what the product offers and seek out the best deal. A solid credit history is also important because insurers use credit information to price some types of insurance. You can buy insurance to cover all kinds of risks, but basic needs can be met with property, health, and life insurance. Quick thing on property insurance, typically you're gonna say that's auto and homeowners insurance. States require that you have at least liability insurance. Deductible is what you pay out of pocket before the insurance kicks in. So if I have $1,000 deductible, I pay the first $1,000 if I have a claim, and then the insurance company typically pays the rest as long as they're covering that claim. So if you have more of a rainy day savings account, you can afford to have a higher deductible. And typically when you have a higher deductible, those premiums, what you pay the insurance company for the coverage, are lower. Okay. So keep that in mind. If you don't have a lot of savings, you might want to have a lower deductible so that your savings isn't wiped out by paying that insurance deductible. Homeowners insurance is important. Obviously, it protects you in case of a loss, but also if you are renting. If you're renting an apartment, you should purchase renters or contents insurance to cover your possessions against loss. That landlord insurance will only cover the damage for the building, not its contents. If you are a college student, I would recommend you call the insurance company that your parents have through their homeowners and see if you are covered through their homeowners insurance or a possessions or renters insurance cost. If not, then you might talk to that same insurance agent about getting some renters coverage. Because if you have a computer and all of your belongings and a PlayStation and a TV and whatever else in that apartment, and there's a major loss, you're not going to get reimbursed for any of that unless you have insurance on it. Homeowners insurance covers your home and possessions. The personal liability coverage in a homeowner's policy protects you from loss resulting from any injuries that may occur on your property. Your mortgage lender will require you carry a certain amount of insurance coverage as long as the mortgage is in place. You may also consider a higher deductible to save money on your premiums. If somebody slips and falls on my front step, I have liability to cover because that happened on my property. So not only does it cover if my house burns down or if there's a storm that comes through, whatever it might be, but it also helps protect me from any liability if I were sued because somebody's injured on my property. Standard homeowners insurance covers your home and its contents against such loss such as fire or theft. You may require special insurance for flood, earthquake, or other risks specific to your area. Contact your state Department of Insurance for more information on those insurances. Also, again, I recommend that you meet with an insurance agent, property casualty agent, and there are some great ones in that business. Meet with them, and they can help you put together coverage that meets your needs. Health insurance is another very important thing that we need. Any health emergency that requires a ICU stay or a helicopter ride or a major surgery is going to be very expensive. So health insurance or medical insurance helps us cover those costs. No one wants to worry about a trip to the emergency room, wiping out everything they've saved toward their financial goals or putting them into deep financial debt. Studies show unexpected medical expenses are the leading cause of bankruptcy in America. Research also tells us that many people cut back on their medications trying to keep the medical costs low, a practice that will likely lead to worsening health and higher costs. Many households have significant levels of debt because they didn't have medical insurance or because they didn't have savings to pay the expenses that were not covered by their health plan. Late payments and defaults on medical debt may be reported on credit reports and affect your credit score. Not too many years ago, the Affordable Care Act was passed into law. The Affordable Care Act is designed to help people afford health insurance. You can get tax credits based on income. If your income is low, you might even get qualify to be on a Medicaid program. Regardless of income, you can get proper coverage. Many people might have employer health insurance. If that is an option for you, I would recommend talking to the HR department at your employer and finding out what is the best plan that fits your needs that the employer might offer. Healthcare.gov is a great resource for the Affordable Care Act. If you live in the state of Minnesota like I do, Mnsure, MNSURE.org is the state of Minnesota health plan. There are enrollers listed on that website that can help you enroll into that plan. If you're comfortable doing it yourself, you can certainly do it online too. That is an essential, in my opinion. Health insurance is a basic need. And regardless of income, you do have resources available to help you meet that need. If you are eligible, if you have children in the home and your income is low, Medicaid may be another resource that can help you get coverage for your children. If you don't have medical insurance or are struggling to afford your medical insurance, I would recommend that you seek a insurance agent or go to the Mnsure or Affordable Care website and find an enroller that can help you navigate that. It is sometimes very daunting to navigate, but there are some great resources and some great people that are willing to help you. The last three insurances that we're going to talk about are disability, life insurance, and long-term care. We won't do a deep dive on those, but we will certainly just give you the 30,000-foot view. And if you are looking for any of those things, seek an insurance professional to help you navigate that. Disability. Statistics show that you have a higher risk of becoming disabled than dying before age 65. Disability insurance helps you pay living expenses if you are sick or injured and unable to work for a long time. Your employer may offer this insurance in its benefits plan. Ask the HR desk or the HR professional at your business, and they might be able to help you with that. If not, you might consider buying some protection, even if you have to pay part of the premium. A lot of times, if we are disabled, there are also medical bills involved. So it becomes a double whammy, because if I can't work, I can't pay my bills. And if I'm doctoring, I might have additional bills that I have to pay. So health insurance and disability insurance are some basic needs that you might want to look into. Life insurance is also something that I would recommend you look for. If anybody is counting on you and your income, you need to have some life insurance to protect them. The need for life insurance depends on your circumstances. In the event of your death, life insurance pays money to the person you choose, who's your beneficiary, and helps give them financial protection. It could be your children, spouse, parents, or even your business. If you are going to college and your parents co-sign on your debt, your college debt, you might want to have some life insurance on yourself, or your parents might want to have some life insurance on you, because that would cover the debt payments that they're obligated to pay if they co-sign. Sometimes some types of life insurance offer savings and investment components to keep the future costs of premiums lower or to increase the death benefit. They may not be suitable for a savings or investment plan. Low-cost term insurance, often available through your employer, can offer protection for young families. Insurance, life insurance especially, much like investments, needs to have a deep conversation, and we like to match our insurance to our needs. So if my need is to cover my mortgage, a 20 or 30-year insurance policy might be the best and most efficient way to cover that debt. If I have a permanent need and I need insurance to pay for estate taxes or to equalize my estate or just to pass on to my children because I want them to inherit an amount of insurance, then maybe a permanent plan would be the right fit. Ultimately, find an insurance professional that you're comfortable with, have the conversation with them about what your needs are and what the reason for that insurance is, and they'll be able to fit a plan that fits in your needs. Long-term care insurance is another hot button topic. Long-term care insurance covers you if you're in a long-term care situation, whether it be home health care, nursing home, assisted living, or anything like that. Generally, the need for long-term care comes later in life, but insurance premiums are much less expensive when you're younger. Some employers offer access to long-term care insurance for their employees, so ask the HR professional where you work. But most consumers have to find coverage on their own. There are a lot of different types of long-term care, and that insurance marketplace is evolving very quickly because of the cost of long-term care insurance. My recommendation is you talk to your financial planner and your insurance professional about what your concerns are with long-term care, and they can maybe help fit you in the right policy that fits your needs. Tips for protecting your wealth. There are many types of property, health, and life insurance, so do your research and seek good advice. Take advantage of group insurance through your employer and other associations you may have. If you're a member of a professional association or a union, you might want to ask them what's available. Anticipate the needs of your family and decide how much you can afford to pay. Shop around, get a few quotes. Consider a higher deductible to lower your premium. Ask about other discounts that may be available. Maybe a good driving record, safety equipment, multiple policies. If your kids are on the honor roll, there might be a good driver discount and an honor roll discount for them. Review your insurance coverage annually and make sure that you have the appropriate coverage as your situation changes. With all investments, make sure you get the facts before parting with your hard-earned money. Don't just ever always assume that the insurance you have is the insurance that you should have forever. Review it on a regular basis. Talk to your independent insurance agent and make some decisions that are in your best interest. Congratulations, you've completed the Building Wealth workbook. Now it's time to do a little review and review those things that we talked about in the first Building Wealth, learning the language, and really revisit what you've learned, and maybe the things that we talked about then are different and your mindset is a little different. So has your definition of wealth changed? Now that you've read this workbook and we've gone through these videos, how would you define wealth? In the space provided, write your definition and then compare it with the definition you wrote back on page 1. Let's reset your financial goals. Write down your financial goals and compare them with your original goals on page 4. Keep these new goals with your definition of wealth. Refer to these goals and measure your assets minus liabilities, and that equals net worth to make sure you are building wealth and staying on track. So have your short-term goals changed? And what are they? Remember, short-term goals are anything within 3 years. Now look at your long-term goals. Anything longer than 3 years. Have they changed? After going through the workbook, what are your key wealth building strategies? I would recommend that you continue to educate yourself, and self-education is the best education. Certainly establish some financial goals and write them down. That helps you stay on track. You're not going to reach every goal, and that's okay. But having those goals in mind helps you. Create a budget, save each month. Automatic deductions usually the best, so then you know what's happening and you are striving to meet those goals. Take advantage of compounding interest and tax-deferred investments. Research and learn about the best investments for your financial goals, time horizon, and risk tolerance. Take some time to research the best investments for you. Don't just listen to your brother-in-law. Okay, you have to take into consider your situation and what your goals are. Build credit and use it wisely, controlling your debt, and then protect your wealth. So what are some strategies that you are going to use for wealth building? And then how are you going to build credit and control your debt? I hope this workbook helped. Hopefully you can build some good habits and build your wealth over time. Remember, it does not happen overnight. It's every day. It's a lifestyle. But as long as you educate yourself and continue to strive to get better, I have no doubt that you can reach your financial goals. Thanks for watching. Give any feedback that you might have on these videos. We'd appreciate it. share it with those who are interested in learning more about it, especially your children, grandchildren, and anybody that is young in life that needs to build some good habits. Have a great day.